So we have a full shark fin turn divergence. And once the shark fin turned divergence, you can see it reacted off the 2.5 deviation Bollinger Band. The bands are starting to flatten. We also after market turn divergence, you can see that it started finding structure, so it started consolidating on that level of divergence, which was also at a psychological number, 1.74500, almost like to a T. So let's pull this up. So we have a 4-hour shark fin. We have 4-hour shark fin turned divergence. We have Bollinger Band squeeze and the reaction at the 2.5 deviation. The divergence formed structure at a psychological level, or in other words, the quarterly theory, or like the bank numbers. So it would like 250, 500, 750, 1000. So it would be 1.74, 500. And then we got to push straight to that 4-hour 50. But now we broke the 4-hour 50. What I'm looking for is for the pretty much the same exact thing at another level of structure. So as you can see, we have previous structure up here. We have an 800 moving average. We have a couple levels of confluence already forming for a potential sell in that area. So that's why I'm taking it to that level. When you're trading the strategy, you want to make sure that you're finding confluence against your trade. This will help discern whether you want to stay in the trade or not, whether you want to take partials. And then if you go to the daily, so we want the 4-hour and daily to correlate. So the reason why I think that market's going to remain bearish, is because the daily has yet to form a shark fin against us. So we do have a shark fin previously. We have failed shark fin divergence back here, so you can see it right here as well. So I love this. This is just another example. So we have failed shark fin right back here, turned divergence on the daily, which gave us a really beautiful move here. And look where it pushed. It didn't create new highs. It created lower highs, but it did give us a nice, really nice move with barely any drawdown right at that previous structure. So as you can see, it formed structure here again. This was also that psychological level we were talking about. Even if we took this trade previously, it came back, retested structure, and saw absolutely no drawdown. And what I'm looking for is I'm looking for market to create another lower high on the higher time frame. So I'm looking for market to create another lower high at the 200 moving average on the daily. I'm looking because look, we have a shark fin in our favor on the daily off the 200, and we failed to complete. So what I'm looking for is I'm looking for that. We have the break of the moving average. I'm looking for a retest for a continuation. So if you go to the 4-hour, the 4-hour right now is already in shark fin territory. But I want the 4-hour and the daily to correlate. So this is what I'm looking for. I'm looking for that retest of the 800 up here. I'll set my stop above the previous high, and I'll be taking it right back down to that structure area. And this thing could continue to drop, could create lower lows. But yeah, I would be looking for something like this after. I'll set that really tight. because I don't even think it's going to create that double top. I think that that this would be the area it's going to drop. So I'd be looking for that shark. It's going to be a shark fin, 100%. It's going to be completely overextended. We could get a reaction here because market's already overbought. But what I'm looking for is that shark fin to overextend to that 800 moving average, which does have a long way to go, but it would be also a retest of the daily 200 with structure. It wouldn't. It would most likely, if it's going to be shark fin turn divergence in any way, it would be on the 4-hour because you see markets already overbought. We could get that extension, a pull back, and as market starts to pull back, the shark fin will start to create that divergence. And what I mean by that is the TDI will start to completely head back down and start to do something like this. So it'll start to do this while market's doing this. You understand? So this is what I'm looking for on the 4-hour. The daily will be the retest of the 200 moving average. And then what you want to do is you want to scale down. You want to just go to the 1-hour, to the 30-minute, to the 15-minute, and start looking for those shark fins in your favor. And that pretty much sums up how I trade. So I look for those levels of confluence. Let me go to the daily. So if you feel free to write this down. So what I look for is the most important thing is the 4-hour and daily chart must correlate or be in some sort of on each other's side. I want to see a potential moving average or a level of structure. So the moving average, we're going to use those. We're going to use the moving averages as levels of dynamic support or resistance. So these are going to be our, especially when they're all at levels of structure like this one, like the 200 being at a previous resistance. So you look at support resistance, you want to use the moving averages as another confluence of support and resistance. So we call that dynamic support and resistance using moving averages. They're not always needed to find these trades. Like I said, we have a shark fin turn divergence off the Bollinger Band. So that's the bread and butter. That's where you find entries, and this is how you determine whether market is going to go move in your favor. So what you want to look for, that's the most important when it comes to these type of trades, is the shark fin, which would be when the TDI is oversold or overbought above or below the Bollinger Bands at the 75 or 25 level. So just because you see a shark fin, like let's say this was a shark fin and market was, above the Bollinger Bands, but it was still below the 75 or 25 level, I don't consider those 100% shark fins. I'm looking for a market to be above those levels to give me that extra form of confluence. So what we're looking for is a shark fin turned. It could just be a shark fin off a moving average that sometimes does work. Those aren't the trades I look for. I look for that the shark fin turned divergence. If you get a moving average, that's great. But what we want to do is we also want to look for that nice tight Bollinger Band squeeze. So as you can see, market is completely overextended at this point where the shark fin formed. And then as it started to form that divergence, the band started to flatten out. So you see the market's band started to come together, and then we also got a reaction off the moving average, which would be our entry. So we want shark fin turn divergence with Bollinger Band squeeze. And then using one of the deviations, the Bollinger Band deviations, as an entry point. And then how you determine a take profit or stop loss. Like I said, we want to look for the same strategy as the market's moving, to find levels of potential reversals, so that way we can protect profits or secure some sort of profits, or to protect the trade. Say we want to set the trade to break even, we'll know when market starts to form these this confluence against us. So using one of the Bollinger Bands deviations as point of entry, then what we want to do is we want to set our stop loss outside of structure, or which usually the way I look at it is I usually try to set it outside of the previous band or outside of previous lows or anything like that. So at this point, we have major structure here, anywhere in this area for this long position. As you can, like, guys, literally 0 to no drawdown, and our entry was at 4,500. I would set it probably to this wick, because this is where the structure more or less the structure is starting to pick itself up. I would set it out like pretty much at that previous wick, which would only be about not even 60 pips, while our TP is a couple hundred. So that's how I look at it. You get 0 to no drawdown. You can almost instantly protect your trade, and you'd be able, at this point, I would start taking partials at that daily 50. Once market hits that daily 50, we have confluence against us. That's usually used as dynamic support or resistance. So if you draw up a level of structure here, you can see at the 50, we have support, break, turn resistance, and then we also have support, resistance, all these wicks back here. So you want to also just make sure that once you have some sort of confluence against you, that you are protecting your profits. So take some partials, set the trade to break even, and then let the rest run. And the same thing for take profit. What you want to do is where you want to set your take profit at a level of structure, another previous level of a 200 moving average with structure, or you want to set it to where you believe that market's going to start forming shark fins against you at a moving average or a level of structure. That pretty much breaks down how I look for entries, stop loss, what I look for when trying to find a trade, and how I personally trade the shark fin strategy.